Hey guys, Vishal this side from Trader School, and in today's video we are going to cover something which is quite important, and I think a lot of people who are following us for a decently long time across all our communities have this question in particular. Again, this is in relation to how actually someone can set up their career in financial markets, right? So, I mean, there are lots and lots of people who lean towards trading, right? They find it as a topic of interest, and we try to make money by putting in our funds. We try to learn new concepts and all those things, right? But how exactly you can sort of build a stable career in this particular field, right? So that is something which is unanswered, right? Which a lot of people haven't really focused on, or in general, a lot of people are not really aware of how we can sort of build a career in this particular field, right? So that's exactly what I am going to cover in this particular video. Okay. Me personally, having an experience of more than 5 years working in this particular field, my of course my domain is crypto. I mean, it is more crypto than trading. Okay, but we happen to have a team who are coming from backgrounds of different financial markets. So I think I will be able to answer this question in a good way for everyone. So this would be a video for all those students who are aspirational about trading and sort of want to pursue trading for a longer period of time. Also, this would be for those people who are trying to switch to roles within the trading industry. Okay. Let's get started without any further delay. Okay. So again, building a career in trading and financial markets. I sort of built a PPT so that I think you guys would be able to go through it better. So why financial markets, right? Okay, so see, first of all, keep aside the perspective of retail trading for a second. Okay, I know you guys trade in crypto futures, stock options, crypto index options, currency derivatives. Then we have commodities, forex, right, and all those markets, right? uh, we have an entirely big ecosystem in this particular field. Okay, when it comes to retail trading, so we are sort of engaged in all these activities, right? And our whole and our only goal is to sort of make money consistently, right? But things differ quite significantly when it comes to how institutions, or you could say how big firms actually look forward to finding opportunities in this space, right? So first of all, uh, big institutions, big trading firms, they're I think I'd say usually they would not find opportunities in the way the retail people does, right? So for example, you would be trading a particular crypto future, right? But they would be trading a particular spread on futures, right? So there are lots of differences when it comes to how institutions trade, and this primarily comes through one particular aspect, which is the size of the capital which you are talking about, right? So for a retail trader, I think the usual size of capital varies from 20-30,000 rupees to something like a CR, 1 crore, right? When it comes to the risk that you take, right? First of all, most of us fail to define a risk on our capital. But when it comes to institutions who are trading millions and billions of dollars, right? So you must have heard of firms like Tower Research, MicroStrategy, Futures First, right? These firms happen to have a massive size of capital, which they diversify across different markets, right? So for example, they would diversify a part of it into livestock, a part of it into currency derivatives, a part of it into interest rate derivatives, and multiple other asset classes and instruments, right? Secondly, they have complex execution logic and execution algos, which means basically, if you sort of want to get into the markets, right? Because of heavy amounts of investments, because of good quantities of investments, you would not directly be able to enter the way you do in a normal entry scenario, right? If you are trying to buy something or trying to sell something, it won't be so easy as you do on some traditional exchange that we usually use, right? Their entries, their sort of I could say their way of placing their money in the markets is way different. It usually doesn't involve one step but multiple steps, right? So if you guys are aware, I think there is something called as price ladder, right? So price ladders is something which a lot of institutions use to get into a certain market. So price ladder is basically, you could say, limit orders which are sort of stacked up from one price to another. So it's a range of prices between which we have the limit orders stacked up. And once the market sort of gets into that particular range, so their orders starts getting filled up, and eventually they are able to enter the market, right? Typically this is used by market makers and liquidity providers. Again, these are big institutions which are doing it. They are not small firms, okay? They are not individuals also. And similarly, the story continues in every financial market out there, right? It's just an example that I took, okay? Now this is one side of the story, right, where we are talking about how different markets are being utilized by big institutions to sort of exploit inefficiencies, right? So in inefficiency, what do I mean by inefficiency? The term inefficiency, right? So, think of it as the spread, right? The bid-ask spread, right? So when it comes to futures markets, right, perpetuals which you are trading on, so the spreads are quite small, right? But when it comes to the spreads that we talk about in options market, so those spreads are big, right? I'm talking about crypto markets specifically, right? Things could vary in the our equity market situation, okay? But you understand, right? This is just one of the points. So if suppose you sort of try to build a system which tries to leverage, or you could say which tries to exploit that massive bid-ask spread that exists within certain option contracts in the crypto market, then how would you be able to do it, right? Because that is pure money. That is where the opportunity is. At some point of time in the past, even in futures, we used to have those kinds of spreads, okay? I'm talking about the era of 2013, 2014 and so on. But when it comes to the present day scenario, so future spreads have gone down. Why they have gone down? Because of the involvement of lots and lots of market makers, lots and lots of liquidity providers. So that is a kind of an inefficiency, right? So currently crypto options is where a lot of inefficiencies exist. This is just again an example, just trying to explain what the term inefficiency means, right? So in an efficient market, ideally the definition of efficiency in a market is you sort of have the perfect liquidity. So no matter what kind of position size you are trying to get into, it doesn't at all impact the market price, okay? Secondly, market makers are sort of able to handle every sort of pump and dump in prices, right? So markets obviously would react to a certain situation, but eventually in an efficient market things are mostly range bound, right? So that's why we see Bitcoin to be more range bound than maybe altcoins, right? What is the reason behind? The reason is Bitcoin is a more efficient market, or you could say the number of institutions, the number of big firms which are within Bitcoin, number of big traders, institutional traders, they are the number of such traders are much more in Bitcoin, right, as compared to altcoins. And that also comes primarily due to how old Bitcoin is and how new the altcoins are, and the third, how non-volatile Bitcoin is as compared to maybe something like a meme, right? So that's where the you could say differentiation starts, right? So if you compare Bitcoin to something like HDFC Bank, or you could say something like S&P 500, right? So again, the definition of inefficiency would come for Bitcoin there, right? Because after all, Bitcoin being a currency, or you could say Bitcoin trying to replace a currency system, is still so much volatile, right? So ultimately, if Bitcoin becomes a currency at some point of time in future, right, then you would not see Bitcoin move between $60,000 and $1,20,000 right away. It would sort of become stable at one point, right? Just how INR is, or just how USD is, right? So you need to understand that point of view, right? Since crypto markets are volatile, so it basically means that a lot of inefficiency still exists in that market. So with time, more and more institutions would come in and sort of put in their funds. More and more market makers will be there, liquidity providers will be there, and eventually it would sort of turn into a more efficient market. A perfectly efficient market doesn't exist. So, you know, I hope you understood, right, what I'm trying to talk about. So again, when it comes to markets, it is all about exploiting inefficiencies, right? You trade breakouts, institutions trade inefficiencies. That is the difference, right? You sort of uh, try to find a big opportunity, but institutions would be happy with a small kind of a bid ask spread, right, which they would try to leverage with big amount of capital, right? Secondly, now let me conclude the markets part. Let me now come to the uh, you know products, or you could say the companies which exist within the financial market ecosystem. So this could be the trading firms out there which have good amount of money, and they have lots and lots of traders who are working for them, uh, of course on an employment basis. And this could be quantitative researchers, this could be fixed income traders, this could be market analysts, this could be financial analysts, risk analysts. There are multiple such roles, but essentially the work is same, right? Now comes the stock exchanges and the crypto exchanges out there. So NSE, BSE, of course, big firms. When it comes to crypto, we have lots of exchanges globally. So starting from Coinbase to Binance to something like CoinDCX, CoinSwitch, we have lots of such brokers, right? And these people are making good money, right? Of course, because they are a brokerage house, they are an exchange, right? So in whatever transactions, like every transaction, they sort of make a commission out of it, right? But again, they also have to cater the risk of a black swan event, which might happen at any point of time, because after all, it is the markets, right? So just keep in mind of one thing: every company or every firm which exists in this list, right, they sort of have a risk always, right? So risk management is applicable to all the companies out there. It's not only for us traders, but for these companies also, right? Whether it is fintech, whether it is investment firms, asset management companies, right, brokers also, okay? So everywhere, risk management is something which has to be looked upon, and this is true for every business. This is not only true for businesses within financial markets, but in general with every business out there, right? So risk is always there, and that's why if you are sort of getting hired in this particular space, then you should understand risk management in a nice way. And risk management shouldn't be only understood upon a small amount of capital which has been invested, right? Just don't say ki you have to have a good risk reward, or you have to have a good you could say big stop loss or small stop loss. No, not like that. These are very uh, you know you could say meaningless statements. Why? Because risk management is a much broader term, right? So whenever there is a system, whenever there is something which you are using to make money, so risk management has to be more robust, right? So of course we will talk about this in future videos out there, but I hope you get the point. Now let me go ahead. So the next big question: who can build a career in this, right? So see, essentially the trading field doesn't really look forward to what kind of a background you are coming from. Perhaps the influence of background is 30%, right? So all you need to have is a bachelor's degree, right? So whether it is an engineering degree, a commerce degree, or even an arts degree, right? It's not a problem. It's not a big problem as such. You can sort of get started with any background, but yes, uh, being this field, this field being financial markets, right? The knowledge of computer science, the knowledge of statistics, mathematics, of course some commerce, is usually a cherry on the cake. Okay, discussion. So again, when it comes to you having a background in mathematics or statistics, it is a cherry on the cake, and you are at a better place of getting to build a career in this, because after all, you need the skills of mathematics, right? Even if you have 3 to 4 years of experience in trading, right? If you have traded, if you have put in your money, so that is also a commendable experience, right? Just to make things clear. Okay, but the fact that you have that experience doesn't mean that you will perform better at the company, because what you do right now will be very different from what you will be doing at such a firm, right? So you can see I have listed down the top you know top trading firms out there in India. So Futures First, Alpha Grab, Graviton, IMC, Tower Research, ARB, right? Brokers, we have a big list. Of course, we didn't mention a lot here, but you understand. So here I just told about what are the different roles which are available. So trading, market analyst, fixed income, financial analyst, these are the usual roles. These are the entry level roles. You can make a hefty amount of money being within these roles, okay? And at least, like, if you work in this particular fields, in this particular under this particular roles for at least 3 to 4 years, then you get a good chance to sort of switch to quant also. But getting into quant requires you to have very strong coding skills, very strong mathematics skills, right? And of course data analysis skills, right? So these three things are very important if you want to get into quant. So quant is not for everyone, I'd say. That's why quant is more for those people who come from a strictly CS background or a mathematics background, right? But yeah, switching from a market analyst role to quant role is easy if you have those experience, those skill sets with you, right? And then we have the market infrastructure roles, where we have operations. Operations applies to every market, every sort of company, right? So whether it is a broker or an exchange or a asset management company or anything, so ops is a big space. Okay, so roles are different. Roles could be into core trading, roles could be allied around trading, right? So it depends upon what kind of a skill set you have, right? If you don't get into the core, then you get into the allied roles, right? Now usually I'll tell you about the hiring procedure. So again, this is a more comprehensive list, or you could say a flow chart. Usually people do not have to go through all these steps, okay? So usually, if you're in a part of a bulk application, right, so then you have this resume shortlisting thing happening. If you get through a referral, it's easy for you. You don't have to go through this. In many cases, you don't even have to go through an aptitude test, right? Then we have mental maths and probability. Again, this is one part. 2 and 3 combines one part, where you sort of have to appear a online assessment, right? And then comes this group discussion or group assessment thing, which is used by certain companies, right? Which is used by some particular companies. And yeah, like, again, depends upon which company you are applying for. And then we have the technical plus HR interviews. So usually 1 to 2 technical rounds, where they will ask you questions around markets. And then you have an HR round, where how an HR round works, right? If you don't, then just search about it on YouTube. You'll get more information out of it. But yeah, this is the usual flow. Okay, flow can be small, flow can be big, depends upon the company and how you are applying. So skills, usually again, markets, derivatives is a plus. Derivatives is something which we will teach you, and it is very important. Mental math, a bit of mathematics, of course. Need to brush up your skills if you don't understand it. Probability, again, not a must, but you could say, yeah, if you know a bit of probability, then it's good for you. basic computer skills, Excel, and Python also, if you want to apply for quant. Okay, but again, not a need for a basic market analyst role, right? And yeah, here you need to be very consistent. So first is communication has to be top notch if you want to get into any sort of skills, right? uh, Decision making also does come with risk management. So you have to understand that the companies usually look for good risk managers, right? So how have you managed your risk, whether it could be in trading or could be in business? That is a good story to tell, okay, in an interview. So how do you stand out? Trading journal, strategies, backtesting, which I will focus, market research, right? uh, Trading journal again does come with risk management skills, and of course some projects, right? And your LinkedIn profile, right? So you should be able to show that you have done something in trading, right? It's not that just you have understood what trading is and sort of sat in that interview. It shouldn't work that way, okay? That is very important. Then comes the salary. The average salary is somewhere between 14 to 20 LPA for a market analyst role. Quant it does go significantly higher, and as you move from a market analyst to a senior trader or a fixed income trader, so the salary, I mean the package does go up. But usually it is not the package that makes a lot of sense here. It is the bonuses that you get, right? Because you will be going to trade on real capital, and that's where the real money is. If you can make a good hefty amount of profit, then you get a good amount of good percentage of that profit as your commission, right? So that is what you get, and those numbers are actually super, okay? So maybe 3 or 4 times of what you make as a salary. That is what is more important. So now coming to what we are doing. So Trader School's placement assistance program is exactly the one course, you could say, or you could say one particular 3 months of rigorous training that you would need to sort of get into this kind of a market. And of course, if you are having problems with finding a role here, then we have a very strong network of individuals who are spread across all these companies out there. So you know this is the first ever program that exists in India that sort of trains you from the very basics, right? Goes you through all the helps you go through all the markets, build the trading journal, build those projects, build those skills that you would need to get into a trading firm or any firm within the financial market, right? So you can see, learn markets, build the skills, complete the projects, prepare for interviews, get the referrals, and get your first job in this field. The first of its kind, and yes, uh, you know, the program is priced at only a mere 25,000 rupees. And of course, this is our first batch of 2026, so we are sort of asking for a lower price, right? We'll hike the prices as we go ahead with our second and third batches. But yes, this is the first sort of course that has been built around this exact problem statement, right? So people usually don't get an opportunity to sort of enter into such a role, and that too, with all those skills that we have mentioned, right? So that's exactly where our placement assistance program comes. So it's a total of 6 months program, right? The first 3 months pure academic learning, right, and projects, and the next 3 months purely interview preparation, online assessment preparation, and most importantly the referrals and the actual interviews, right? So hope that is clear. I'd love to answer all the questions that you guys ask in the comment section, and I believe with that said, I conclude the video. Thanks for the time again. I hope the video was insightful. See you all in our next video. Okay, guys. Thank you.